Hello, good day. My name is Peter Mulroy. I'm the Secretary General of FCI. FCI is the global nonprofit association for the factoring, receivables, and supply chain finance industry. FCI has over 400 members in 93 countries, and we are here in Marrakesh, Morocco, celebrating the FCI 55th annual meeting, and I'm delighted to be here to talk about the factoring model law. I'm here with the Secretary General of the UNIDROIT, Mr. Ignacio Tirado. Ignacio, could you say a few words and introduce yourself?
Hi, Peter. Thanks. Thanks for the introduction. Well, as you said, I'm the Secretary General of UNIDROIT. UNIDROIT is an intergovernmental organization which exists for almost 100 years now. We'll have in 26 the 100 years, and we work towards the harmonization of private law. We basically make treaties and model laws. So we are what you would call a standard setter. We codify best practices, and through a methodology which is wide encompassing and open and takes into consideration different legal families as well as in the industry, those that need to benefit and apply the rules, we try to come up with rules which will help countries modernize their systems.
Wonderful, wonderful. Yes, and of course we're here together for the launch of the factoring model law by the UNIDROIT. The UNIDROIT created the Convention on International Factoring back in 1988. It was the very first convention on factoring, and now we're here 40 plus years later talking about the launch of this interesting product. Let me ask you, what made you, the UNIDROIT, decide to consider launching the factoring model law, and talk a little bit about the journey?
Right. Thanks. This is an excellent question. As you just mentioned, we were the first to regulate factoring internationally, but that's precisely the point. It was international factoring that we did work on. And then the United Nations Commission on International Trade Law, our sister organization, UNCITRAL, did work on the assignment of receivables convention, which was a step forward. And then additional instruments were approved by different international organizations, both private and public, including your own work and the work of the African Export and Import Bank, all excellent pieces of work. Also, UNCITRAL came up with its work on secure transactions generally, which included a part on receivables financing. But at a certain point, we got the knock on the door by the World Bank, who, as you know, is used to working on the ground with countries, and therefore is able to identify where there is a gap, where there is a need for further assistance, where there is a need for an international standard that they can use to help modernize the framework and complete the framework for a full market regime. And they identified two things. On the one hand, that access to credit was a key problem, especially in developing countries, although not only. And also that although they had, some of them, good systems of secure transactions, at least on paper, few of them had adequate modern legislation on factoring, which, although all of you super experts think is a very plain, simple thing, it's actually quite complicated from a legal standpoint. So they said we need a standard to take to countries to ensure that SMEs can access financing by providing the only thing that they often have, which is their business case, their future receivables. So that's the reason behind it. Yeah.
What are some of the highlights from the factoring model law in terms of the content, and how do you believe this content will really help and assist the development of factoring and supply chain finance globally?
Right. Well, you know, it's been a long day. I'm sure you don't have the time for it, so I will be very brief about it now. The model law on factoring, first of all, is a standalone instrument, and therefore as a standalone instrument is easier to grapple with from the legislator standpoint, not only from the legislator standpoint, also from those that need to apply it, judges and lawyers also, and of course the financing industry. It's a standalone and sufficient instrument, so you don't need to refer to other pieces of legislation. I mean, you always do because it's in the context of a legal framework, right. but as opposed to being part of a more general secure transactions law, this is just a factoring law on factoring exclusively, covering all types of factoring, and that's very useful, I think, because those that needed to apply in developing economies were finding it a bit too complicated to grapple with the entire system of secure transactions in one go. So that's on the one hand. The model loan factoring is also a model law which has been cooked in slow motion with a lot of effort and a very diverse set of experts and observers, so that it caters for the needs of both civil law and common law approaches to legislation. And that's very important because no country and no system should feel alien to this model law. I should say, I think this model law strikes an amazing balance at being understandable and easy to interpret and implement by all types of legal families. That's, I think, very important. Another element is that, it's a model law which is relatively short. It has, I believe, if I'm not mistaken, 57 articles, which is a manageable amount of articles. And I want to think that has achieved enormous amount of clarity. The legal drafting is very clear, short sentences, to the point, no lengthy explanation, no super lengthy definitions. So I think it's user-friendly in that sense too. As to the content, it's wide encompassing. It, as you know very well, because you were part of it, yes. It covers recourse and non-recourse, with notification, without notification, national and international. It does cover, of course, it caters for both more ordinary factoring and also reverse factoring. So it's ideal to regulate the supply chain financing issues that arise. It is also, I want to think, an instrument which covers, without being too regulatory in nature, the key elements of a factoring relationship. It covers, of course, the setting up of the relationship, covers the obligations of the parties, it covers security interests, it covers insolvency. So it touches upon all the different elements that could provide some uncertainty and some difficulty in practice, though so in a very, I think, clear way. And of course, this is a private law piece of legislation that needs to be interpreted and applied together with regulation. And for example, the IFC's new instrument is something which would be key to complement what we did on the private law side. Yes. And I think by providing this simplified but very clear and precise technically model law from a global perspective, so by a global constituency for a global constituency, we hope to achieve increased access to finance, lowering of transaction costs, and ultimately what we really care for, which is that economies thrive and people live happily. Yeah,
and investor confidence.
Investor confidence and legal certainty is the key.
Certainty. That's the key. Yes. Without that, of course, you don't see an industry, right. a factoring industry blossoming.
Exactly.
So let me ask you, we launched today, adjacent to the UNIDROIT model law, the World Bank IFC has launched, as you mentioned just a second ago, it's factoring a guide, regulatory guide, to help central banks establish, adjacent to the law, a regulatory framework, and FCI itself has done a very in-depth study combined with the EUF of 91 countries of all the regulatory and legal infrastructure in each of the countries that we have membership in. And my question to you is, how do you see this all playing together? How do you see the guide and also the FCI legal study in supporting the deployment and hopefully the adoption of this model law in multiple countries?
Well, it's a perfect trio in a way, if you look at it, because on the one hand, your study is a database which is invaluable. It's telling us how things stand across the globe, and therefore you can compare the situation, especially in those countries where data shows that access to credit has not yet reached its maximum potential, and therefore there's room for improvement. Once that's identified, then you say, well, these are the places where legal reform is more likely to happen, or at least more likely to be useful. And how do you do legal reform here? It has two sides. The regulatory side, which is the World Bank part, and the private law side, which is the model law of UNIDROIT. So it is, you did the groundwork, we provided one type of legislation, the World Bank a different one, and note on that.
It's a perfect trio.
It's a perfect trio.
Yeah. Mm-hmm. Ignacio, thank you so much, and thank you for being here in Marrakesh with us.
My pleasure.
Thanks,
Alex.
Thank you.